No safer place for deposits than Silicon Valley Bank, according to the new CEO, which is beyond hilarious. The new government appointed head of Silicon Valley Bank on Tuesday urged deep pocketed venture capitalists to stash their cash there, saying there's no safer place despite last week's collapse of the nation's 16th largest bank, a report said. I'm not asking you to do this as an act of charity, interim CEO Tim Maya Mayopoulos, I'm just going to say Tim Mayo, just because it's easier, said during a morning Zoom call, according to the business website The Information. Mayo told listeners to either leave their money on deposit at the bank or return recent withdrawals, the website said, citing a person with direct knowledge of the call. There is no safer place, Mayo reportedly said, referring to the bank's estimated $6.7 billion worth of venture related debt issued last year to early and mid stage startups. Mayo said those arrangements are in place and we will honor them according to the information. Which, by the way, like it is beyond crazy for this failed bank, basically, with its new CEO that was appointed by the FDIC, to basically be like, oh, yes, this is totally a safe bank with no risk at all. Which the sad reality is, the wording is kind of interesting because, like, there's no safer place. Because many people may not know this, but the amount of money that the FDIC has insured in terms of like the amount of money versus how much money is actually supposedly deposited into all the banks in the country, they can't cover like the money at all. So if you have like maybe 10, 15 different banks all going through like a bank run all at the same time, pretty much the whole financial system will just collapse, right? But I just think it's kind of funny that they're trying to like convince people to keep their money in there. So the FDIC named Mayo to lead the new Bridge Bank, Silicon Valley Bank NA, on Monday after shuttering its predecessor Friday in a move that sparked fears of a looming economic meltdown. A bridge bank is a temporary institution that has been authorized by a financial regulator to operate a failed or insolvent bank until a buyer is found or the bank's assets are liquidated, according to Investopedia. The FDIC transferred all deposits of the defunct bank's parent company, SVB Financial Group, to Silicon Valley Bank NA. The moves came after President Biden signed off Sunday on a controversial plan by the Treasury Department, Federal Reserve, and FDIC to pay back all customers in full, even if their deposits exceeded the statutory $250,000 maximum. Now, the interesting thing about this is like, this is something that they pretty much had to do to prevent massive bank runs of multiple different institutions because there's some extremely large banks out there, I think even bigger than SVB, where they were in technically a more insolvent situation. Now, again, the interesting thing about SVB is that like 93, 97% of all their depositors had over $250,000 in their account, whereas almost every other bank, it's flipped, is usually like, oh, there's like 90% or 70% or like over 50% typically of the bank's depositors have 250 or under in their accounts. So typically a lot of people would be kind of safe or at least protected, even though technically the FDIC doesn't have the actual money to protect everything. Mayo, who succeeded former CEO Greg Becker, sent clients a lengthy email Monday to say that the bank was open and operating normally, according to Reuters. Silicon Valley Bank NA is open and conducting business as usual. We are here to serve you, wrote Mayo, the former head of Fannie Mae. And the thing is, like, if I was running a company and I had a bunch of money that was stashed in SVB in the tunes of like millions of dollars, I would take my money out. Even if they were to reopen it and all that kind of stuff, I would take my money out and put it into something else. Put it into a different institution, put it into a brokerage account, something. Just something different. Because obviously, like, fool me once, shame on me. Fool me twice, shame on you. Fool me three times, I'm basically a fool, pretty much. So, like, how many times do you want to get fooled into trusting an organization? So they say, I recognize the past few days have been an extremely challenging time for our clients and our employees, and we are grateful for the support of the amazing community we serve. I have joined the company as CEO starting today, he wrote. Mayo explained that the FDIC has transferred all deposits and substantially all assets of the former SVB to a newly created full service FDIC operated Bridge Bank in an action designed to protect all depositors of Silicon Valley Bank. He assured depositors that they have full access to their money. I come to this role with humility. I also come to this role with experience in these kinds of situations. I was part of the new leadership team that joined Fannie Mae in the wake of the financial crisis in 2008 to 2009, and I served as the CEO of Fannie Mae from 2012 to 2018, he wrote. Mayo also noted that he served as president of a Silicon Valley based software firm that provides technology to financial institutions to serve their consumer banking customers. I know how important Silicon Valley Bank has been and continues to be the success of its clients in the innovation ecosystem, he wrote. We look to restore your confidence and support you and your companies at this time, the CEO added. SVB executive Gerard Brady praised Mayo for the email. Love seeing this note from our new CEO at SVB. Thanks, Tim Mayo, for a clear message. We are open for business and your deposits are protected, he said in a tweet. And the failure of the SVB was the second largest in U.S. history after Washington Mutual collapsed during the 2008 economic crisis. Let's see. So this person says, how is no one held accountable? I'm glad depositors are able to access all their money, but the executives, the board, the auditors, and the rating agencies should all be fined huge dollars. Now, I do believe that the executives and the board are all going to be investigated for fraud, like securities fraud, etc., because they made, like, a bunch of them made basically millions of dollars, literally days, if not like a month before this crap happened. Let's see, isn't this cute? Everyone who had more than the insured amount in the bank will be made whole, and everyone else can pay for that. There's no free lunch, but there may be free bread lines in our future. We don't even get a say in the matter. The government just decides we get to be taxed to death for the mistakes of others. Like I said in a previous post, the government is like organized crime, run worse than the mafia, but it gets to run wild and has no consequences for the terrible mismanagement. Let's see, a lot of regional banks have secondary insurance, usually up to around 1.5 million, so that they can retain business customers. And here's the thing that people also need to understand. Like, it's sucky that basically they're basically bailing out multi-billion, if not multi-million dollar companies and individuals and all that kind of stuff. But at the same time, if you were in their situation, in their place, you would want your money protected. Like, if you worked hard for whatever money that you had, and basically your money was just basically taken from you due to no fault of your own, you'd be like, I'd like to have that money protected. Like, you'd be in that type of situation. I want to protect myself. I want to protect my family. I want to take care of everything. So I understand probably the depositors like thinking. They're like, oh man, like, we got to try to do everything so that we're protected, our money's protected, all that sort of stuff. But again, like, this is something that they had to do. right? Like, no matter which way you look at it, even though technically speaking, the legal right thing to do would be to let this bank basically go under and just pay up to 250. The reality is, if this bank did collapse, there's going to be a lot of other banks, probably much bigger than them, that would also collapse because then people are going to be like, oh no, we're having a banking disaster. All of our money is not protected. We can't even trust these banks. Take all of our money out. If they don't give us our money, we're going to do something, etc., etc., etc. All hell will break loose, basically. So I understand it. It's just kind of sucky.